To the big earnings loser of the day, that's Meta. It's down more than 20% right now into the close, more than 24%. A miss on earnings, revenue falling for a second quarter in a row. The forecast really was the thing, projecting another drop this quarter and investors balking at how much the company is planning to spend and invest in the metaverse. Joining us now is Matt Ball, founder of Metaverse ETF. Matt, wanted to talk to you today because you're the most expert that we know on the metaverse. And the question of the day is Zuckerberg making a mistake, spending so much and going all in this kind of environment? What do you think?
Well, I think it's interesting. When you go back to October of last year, Zuckerberg was very clear that $10 billion was the foreseeable floor in losses, setting the expectation for 12, 13, and potentially as much as 15 in the years to come. Since that time, we hit a macroeconomic pullback. We've seen the impact of Apple's privacy changes in ATT were more severe than expected, and TikTok became a fierce competitor. With that context and with the view to 40% increases in headcount year over year, I think investors are right to say we need to see more control or at least more progress before that investment continues.
What about the idea of the metaverse? Is it? I know you've been a big believer and you've written a lot of research on this, but is it necessary to spend that much? And what is he actually chasing here?
I think part of the challenge here comes from expectation setting. Look, if you consider Microsoft, NVIDIA, Apple, and others, their investments are also in the 5 to 10 or sometimes more billion in R&D and CapEx per year. The forecasts for the value of the metaverse sit within the trillions. The challenge is those companies have very healthy core businesses. They're graduating into the metaverse, and they didn't set the expectation with investors that this was going to be an extraordinary opportunity within this first half of the decade. By changing the name of the company, by shifting its most prioritized resources to the initiative, and certainly by spending as much as they are when under attack from Apple and TikTok and others, they set themselves up for a very tight rope, and it seems to be one that's circling.
But it sounds like that you're not questioning the strategy. You're questioning what the strategy right now in this economic environment and with the core business seeing some weakness. But the idea of the metaverse, Eric Hippo was on with us at the top of the hour, Matt, and he was saying it's a gaming play. And that's not exactly what Zuckerberg is after here. So it's really hard for investors to grasp just what that is.
Well, the challenge is we see two primary areas of attack. One is on the gaming side. You see this with Roblox, with Unity, with Epic Games and Niantic. And the other is what Microsoft and NVIDIA call digital twins or the industrial metaverse. It's taking a look at a much, much larger TAM than consumer discretionary, digital, or certainly gaming, with much, much more staple customers and a much longer progressive ramp. Going from a new vertical in both virtual reality devices and enterprise productivity software, where you need to pioneer the tech, pioneer the understanding, pioneer the software, and then drive enterprise adaptation, that's the timing issue. Many believe in this opportunity, but they're giving it more time to unfold.
Do you do anything with Meta, with Zuckerberg on this front? Are you working with them at all? You don't?
No, never have.
Because I think the criticism, besides all the spending and what it's going to take, is just trying to envision just what that is. Is it commerce? Is it social? Is it all of the above? I know you've been on many times to remind us about that. But does Zuckerberg's vision line up with the analysis that you do?
It does broadly, but it correlates to what I just mentioned. When you take a look at the centerpiece of their strategy, it's very much focused on virtual reality headsets and the transformation of enterprise productivity through those devices. I tend to hold the opinion that these devices are farther off than many have expected before, and Meta seems to today. And that's going to be a challenge.
You're going to get your ticker symbol back, Meta, before they took it?
I'm just an index provider to Roundhill, which operates the ETF and security.